What on earth is going on with Aave? The Aave token is crashing, and that's because there's some internal fighting going on about governance of the protocol. Within the last week, Aave underperformed the general altcoin market by 20%. Here's the proposal in question that everybody is talking about. Should the branding rights, the naming rights be moved to the token holders away from Aave Labs and other entities? Now, the majority voted no, but the controversial thing here is that the discussion around this move was still going on in the forums while a deadline was put to the vote. So there was a snapshot voting approach chosen. Here's the user that posted that vote, and he's already distancing himself from that. So is this really a long-term problem, or is this just some short-term noise where we then might recover in the price again? Here is the total value locked, or the TVL, of the Aave protocol in US dollars. And here is the same measured in Ethereum. So measured in ETH, we are close to all-time highs. The Aave protocol continues to grow. Let's have a look at some on-chain data. Let's see who's buying and selling here. We've got 196,000 holders on the Ethereum chain. There are other versions on other chains as well, but most liquidity is on Ethereum. Now what you see here on the left, that's the number of wallets with at least 7 Aave tokens. So it's roughly $1,000 worth of the token. In the middle, it's 70 tokens. On the right, it's 700 tokens. So everybody that's listed here on the right has at least $100,000 worth of Aave. We can see how the cohort of the whales have already come down in numbers over the last 5 months. And we do see how the Aave price relative to the rest of the altcoin market went down during the same time period as well. Aave underperformed by 35% since then. The dotted line that we see over here, that's the long-term average ratio of the Aave price relative to the rest of the altcoin market. Now, why has Aave such a hard time outperforming when at the same time the protocol grows that much? I think one of the reasons is token inflation. This is the number of Aave that's floating around over time, and this continues growing. And so the usage of the protocol does come in waves. Of course, when there's more usage of crypto in general, more people tend to use borrowing and lending platforms as well. Currently, the usage is rather in decline. So this shows the daily fees that the protocol is generating. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. One of the reasons for the recent decline might be increased competition. Because why do people use borrowing and lending platforms in the first place? The first reason might be to just get some levered exposure. So let's say you might deposit Bitcoin, then borrow a stablecoin against that Bitcoin that you had deposited as collateral, and you use the stablecoins to buy even more Bitcoin. So you just lever yourself up via a borrowing and lending platform. That's one usage. Another way to use Aave is to just borrow in an altcoin that you're bearish on. So you might deposit, say, Bitcoin. You can then borrow a token that you're not bullish on. Say that's Curve Finance, for example, CRV. You borrow that. You've got a loan denominated in CRV. You then sell that CRV into a stable coin, and then you wait for CRV, in this example, to go down in price. So we can use borrowing and lending platforms to lever up a position. We can also use it to bet on falling prices of something. But both of those use cases are now covered with the perpetual futures market as well. This here is the total value locked of Hyperliquid. And while perpetual futures tend to be used for more risky bets, they can also be used for medium-term bets. And so as a platform like Hyperliquid grows in TVL, it's currently at 4 billion, this can, at least indirectly to a degree, hinder some growth of Aave as well. I'm personally an example of this as well. I used Aave back in the early days to bet on falling altcoin prices. Now I tend to use the perpetual futures. So I'm one of the reasons why Aave isn't growing as quickly anymore than it used to. Aave relative to Bitcoin has underperformed by roughly 52%. And there's a good reason to believe that this underperformance will continue, independent of how much the protocol is growing, simply because of the token inflation, simply because Bitcoin inflates much less in supply over time. We could even make the argument that Bitcoin's liquid supply is already shrinking because some Bitcoin gets lost every year, and if that's more than 0.85% every year, then already right now Bitcoin is not just sound money but ultrasound money, right? Money that shrinks in supply. That's clearly not the case though for Aave. And that's why we see long-term underperformance despite the platform growth. The Aave platform is still useful. For very long-term positions, it is more efficient to use Aave over perpetual futures. We can borrow Tether or USDC for a bit over 4%, and so levering up by just 1.5 or 2x is very, very cheap with a platform like Aave. This costs 10 to 11% using perpetual futures. Then on the other hand, right, whenever we want to time the market, we want to get in and out, we have spot trading fees, and those tend to be 0.2, 0.3% per trade. That's much cheaper for perpetual futures. So borrowing and lending platforms are great for long-term positions. They're not necessarily that great for market timing. There's always going to be a market for borrowing and lending platforms, and Aave is the largest of all of the decentralized finance applications in all of crypto. So Aave will stay around. That being said, will it long-term outperform Bitcoin? I have my doubts, right? Bitcoin outperforms most altcoins most of the time. Aave very short-term depressed though, and will this crisis resolve? I think that's very likely. So short-term, I'm bullish. Long-term, relatively speaking to Bitcoin at least, not so much. Now, there is a reason why the altcoins are performing so poorly, so consistently. It's not like everybody is taking profit. It's rather people like this, venture capitalists that invested in various crypto projects very early on. They got a lot of token allocation. That token allocation might unlock over time. And whenever tokens unlock, the VCs, the venture capitalists, they simply sell. It's a massive problem for the altcoin market. Every week, we see hundreds of millions of new tokens from existing projects hitting the market. It's currently at around 600 to 700 million. Some weeks, it rises above 1 billion. And the fundamental problem really is that there's not enough buyers for all of those new tokens. We can see this not just here on the macro, we can also see this in the micro. Here are a few examples. This is WorldCoin. WorldCoin is supported by Sam Altman, and there are token allocations for investors, token allocations for the development team. The number of tokens is going up constantly. And so WorldCoin relative to Bitcoin after the initial hype is just constantly going down. It's not a coincidence that WorldCoin crashed by 97%. But check this out. This is ZK Zinc. Also has an increasing token supply. Again, investors are getting their tokens unlocked. So does the team. And here's ZK Zinc's price relative to Bitcoin's. It has fallen from the top by more than 90%. We can go on and on. Here is Starknet with a lot of entities getting new tokens. Here is Starknet relative to Bitcoin. Here is Eigenlayer. Here is the Eigenprice relative to Bitcoin. And what we are looking at here is relative performance. So it's not just that the market in general is going down and Bitcoin has fallen by 30 or 40% and that also pushes down the altcoins. No, it's the altcoins performing much, much worse compared to Bitcoin. So when this relative valuation is going down and Bitcoin has fallen already by 30%, the altcoin has fallen by more than 30%. Again, this here is no coincidence. It's the insiders that are dumping on the average retail investor that doesn't really know what's going on. Now here's what I do in order to benefit from all of this. Let's go again to the Eigenlayer price development. Just as an example, right here we still have a lot of token inflation coming. So very likely this price will continue to fall further. So what I'm going to describe is very likely going to be a profitable trade in the next months. Instead of trying to buy the Eigen token, we can do the exact opposite. We can bet on the underperformance of the Eigen token. So we're just flipping this chart. Then it looks like this. Now what we see here in orange, that's the Bitcoin price over the time. So this kind of strategy does outperform just buying and holding Bitcoin by a lot. And again, it's not just random. It's not a coincidence. This is structural. It's because of the venture capitalists dumping on everybody all the time. And so we simply take advantage of that. Whenever a venture capitalist is selling their vested tokens, we are making money. This trade, for example, made roughly 1,300% in the last 12 months. So what do we need to do? We need to bet on rising prices of Bitcoin and falling prices of Eigen at the same time. So we're opening 2 positions, long BTC, short Eigen. And the reason why we want to open both of those positions is that we still have all of that correlation within crypto, right? So if Bitcoin was to suddenly rally by 20, 30, 40%, the Eigen price is likely also going to go up. It's simply just going to go up less. So when Bitcoin goes up 40%, then Eigen might go up by 20%. It still has the selling pressure by the team and by the venture capitalists that will, relatively speaking, depress the price. But the US dollar price itself might still go up when everything is going up. That's why we want to make the delta trade here. We go long Bitcoin, we go short Eigen. We don't just go short Eigen in itself. I'm following this kind of strategy already for 4 years. In the early days with borrowing and lending platforms, recently more with perpetual futures trades. But what we see over here, that's my alpha, my outperformance, my monthly outperformance versus Bitcoin in a given month. So some months I might still make losses because again, even that trade doesn't always go up. So if you shorted Eigen over here, you might have to wait for half a year to actually get in profit. So there are some negative months, but it's about the general trend. The dotted line here, that's my 12-month average. If we average out all of those dots, we come to a monthly outperformance versus just buying and holding Bitcoin of 1.9%. So on average, after fees, I make 1.9% more return than the average Bitcoin hodler. And that's with very conservative risk management. Here's my portfolio. This is not just trading. This is also dollar cost averaging into the trading account. And then I wanted to prove this directly in the market, not just showing here my results, but actually trading for the community as well. So in July of 2025, I opened up a community pool. The premium members, the annual premium members of Bitcoin Strategy, they were able to deposit into that pool. The capital pool had several $1 million under management. And while Bitcoin, during the time period, so we closed the pool just a few days ago, lost 24.9%, we made 17.3%. So over the last 5 months, we made more than just 1.9% alpha per month. And again, this is not just random, right? This is just working with the market structure, working with all of those cash outs that happen in the altcoin market all the time. Here are a few more details around that first copy trading pool. The average depositor in premium put in 17K. In the end, there was 20K in balance, so 2.7K in profit, 13.4% of average return. Now, why is this lower compared to what's shown over here in the chart? It's because most people did not deposit from day one. Many people waited to first see some positive performance and then afterwards deposited. That's why the performance from day one to the closure of the vault is 17.3, but the average member only made 13.4%. Then there is the 10% fee, so that comes from the platform. We use the hyper-liquid decentralized finance application. Still, when we annualize all of that, because this only ran for 5 months, this is 40.81% of return. Independent of the general market, right? We made money when Bitcoin went sideways. We made money when Bitcoin went down. We do this independent of where the general market is going. And again, the reason why this works is because we bet on rising prices of one asset and falling prices of the other asset. So when the general market is going up, then one of our positions goes up, the other position goes down. So this cancels out all the time. So the general market doesn't have any impact on this portfolio. The only thing that has an impact on the portfolio is how the altcoins do, relatively speaking, to our hedge. Now there is a new copy trading pool starting in January of 2026. So if you want to be part of that pool, there's a dedicated video in premium that also explains everything in detail. How to deposit over there, how much capital should be deposited, what are the risks, what are the fees, etc. If you want to get access to that particular video, you can also message me directly. I will then send this to you. So this is all part of the premium membership. If you just want to manually copy trade what I do, I announce this to every member, so you can simply sign up for the monthly membership. If you want to be part of the copy trading vault, then you have to subscribe for the annual membership. You do save $250 per year subscribing annually, and you will get access to the automated copy trading as well. Every trade that I make will automatically be mirrored. And while I cannot promise that we will reach again 40% annualized return, I will work very hard to make this project a success again. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!